Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look at again on euro currency. So today we have prepared the weekly report. It's very informative because actually we have we have put some extractions from the new analysis of the Phantom Consulting concerning the perspective of the Fed policy. As you know, next week we will get the Fed meeting, and all eyes right now stands in the Fed, and we will get the non-farm payrolls release. This will be important. But right now, the Fed has released the new report that is dedicated to their forecast of the overall situation in the United States and concerning the interest rates and so on. And it becomes more dovish. So if just in the last month they still talked about the possible 4 rate increase in 2019, right now they turn to the just 2 rate increasing. Makes it softer. And but even with the 2 rate increasing, this is more hawkish expectation than the market in general has. So as you know, according to the Fed Fund futures rate, the market anticipates just actually no rate increase in 2019, while the Fed Consulting points on the possible 2 rate increasing. It means that in general, guys, there is no still long-term trend established in the euro currency. And speaking on particularly on European Central Bank policy, they definitely has no impact on the balance between the United States dollar and the euro, because actually European Central Bank currently has no policy. So, and definitely it is not driving factor for this currency pair. It means that the behavior and the price action mostly will depend on the United States dollar. And currently, the major driving factor will be not even some events, political, economical, but these balances, the mismatch between those anticipation, those sentiment that already have been priced in the currency rate, and the reality that we will get gradually day by day. So currently next week will be Fed statement, and probably we should hear something new from the Jerome Powell concerning the European and the United States economy. Also we'll get the report, non-farm payrolls, so this also will bring something. And what is more important is that the first statistics on 2019, we will get the first number on the retail sales, when we get the first numbers on the consumption, on the inflation, in the first quarter of 2019, and also the impact on the shutdown. So it's interesting what will happen. So that's what about the long-term situation. In the shorter term, you can see the price action on Friday, guys. This was really significant rally. There's 2 driving factors for that. First is the investors turned all eyes on the Fed, anticipation that the shutdown will make impact on the Fed statement and it will be becoming more dovish. Second, as you know, that Donald Trump has signed a temporal, as I call it, temporal shutdown of the U.S. shutdown. So this is some time of the relief, temporal pause in the shutdown. It also brings some positivity, and you can see this reaction that we have on daily chart. So currently, guys, actually, it's still this a question, how long this action will last and how durable it will be, because actually nothing serious has happened on Friday, and market behaves so as it seems like it knows what Fed will say, and that Fed will say something dovish, but this is still in question what will happen. But anyway, here in the shorter term we have 3 bullish signs that we'll try to use. First of all, this is nicely looking bullish engulfing with a good pace, and we'll try to use this upside momentum for the scalp trades on intraday charts. Second, in fact, you could see that market has shown the fake breakout of this trend line. It was able to hold inside this sideways consolidation that we have on the market, and it's monthly chart flag. Finally, as you can see, reversal has happened right from the monthly pivot support one, and market has jumped above the pivot point. This looks very bullish, and from this standpoint, we should take a look at the monthly pivot resistance one. It stands in 1530. It's sometimes very often happens when market stands on a retracement. Retracement is held by the pivot support, which keeps overall bullish sentiment, and as a result, market returns back to the pivot resistance. That happens very often. So that's what we have on the daily. On the daily chart, market is not at overbought, so it could continue upward action. So, taking all this stuff into consideration, let's take a look at the follow time frame chart. Here we have another important moment, that is bullish reversal swing. So combining the bullish reversal on the follow time frame chart with the engulfing on the daily, it leads us to a couple of moments. So first of all, we could keep an eye on possible reverse head and shoulders pattern. It's very typical in the current environment. So it could become this left shoulder head, it could become right shoulder. Second, since this is the reversal swing, we need to keep an eye on the possible deep retracement. That will be probably up to 50%, somewhere to 1350 or even 1337, the 618 support. That's our target, guys, A, B, C, D, XLP that has been completed on Friday morning. So there's 2 moments to watch for. Also, keep an eye on shape that we could get here. Maybe market will form a kind of the A, B, C, D. In this case, we'll get guardless triple to buy. This will be all the better. So this will get also the pattern on our back for taking the long position. That's in general the trading plan that we'll keep an eye on in the beginning of next week. And just as minor add-on to the, take a look at the hourly chart. On the hourly chart, since this upward action was really fast, we also could get scalp setups by the Jordan. So this is really fast thrusting action. We could get either double repo sell pattern, since we expect the deep retracement, and the market could form the double repo that could become the actual trigger pattern for downward action. Or it's also possible that we could get bread and butter buy. So if market will show deep retracement first right to the 30%, so then pull back, and we could get kind of the A, B, C, D pattern, guardless triple to buy that we just have discussed. So if you're trading on the hourly chart with the and the 5-minute chart, this is the setups that you could keep an eye on this time frame. But for us, since we're mostly watching for a daily chart, daily and 4-hour time frame chart, we're watching mostly for bullish setups. And particularly speaking, this will be guardless triple to buy as a part of the larger reverse head and shoulders pattern here. So that's all that we see right now in the euro. Let's see how the situation will develop next week.